What is going on, guys? It's K-Dub here with a special episode of Crypto Zombie because I figured, we're looking at these charts, things are getting kind of crazy, the president's coming out, we don't know what's going on, so we had to get Mr. Eric Krown on the channel. How's it going, man?
Nation, my God, man, it's been a while, and just happy to be here once again with you and the community.
Yeah, thank you so much, bro. It's always a pleasure. So, what's going on with you right now? So you're no longer in Finland. You moved back to the States. Why?
It's been a little bit of a trip, yeah, man. So I was living in Finland for the past year, then moved over to Estonia to register my company, and then had a little bit of issues with my visas and whatnot, and ended up having to come back to America. So now I'm back in lovely Chicago, Illinois. Absolutely loving it, actually. So
just really in time for the president to not be a fan of Bitcoin, man. So Krown, I think we need to talk about what's going on because we've had probably one of the most volatile months we've had in crypto. I mean, if you don't consider the fact of just going straight up, I mean, as far as up and down, liquidations happening left and right, the crowd is freaking out, panic in the streets. What should we do? I mean, what's going on right now? So I figured we could just dive in and have a look, man, and tell me what you've been seeing.
So I suppose before I get into the actual charts, I mean, this is, as you said, kind of the culmination of about a 5-6 month just straight, pretty much up move for what it's worth. And just intuitively, I'm sure that you and everyone else here knows that, after a massive move like that, you're likely gonna, spend some time going sideways. So we're kind of in one of those periods right now, which we'll get into, I suppose, if I can share my screen. There it is. Am I sharing the right screen? Yeah, okay, there we go.
By the way, for everybody who doesn't actually, I don't know if anybody actually doesn't know Krown at this point. I hope most people would know who you are. Do you just want to give like a super fast intro just in case? I know I've had a few subscribers that maybe haven't seen you on the channel before. So.
Oh, yeah, of course, man. Yep. So my name's Eric Krown. I've been trading for, well, that's kind of a difficult question. I'd say on my own for about 5 years in general as a professional, about 10 years, about a decade. Did start quite early, if you do want the more kind of roundabout answer, I suppose. My father was a trader on the floor of the Pacific Stock Exchange. So I used to go down to the floor of the market each and every summer ever since I was like 11. And I kind of fell in love with it because the guy, it just felt like a playground of adults, which was really awesome, man. Because, I'd always dreaded kind of growing up and, having to put on the suit and tie and, play the whole game, and to go down there and just see everyone having fun, talking smack to each other. One of the brokers, one of the more cavalier brokers came over to me, and I'm a kid at this point. I'm literally like 11 or 12. He says, "Hey kid, what's your name?" And before I could tell him my name, he just puts me in a trash can. So, for whatever reason, I thought that was fun. Maybe that shows I have like low self-esteem or something. But kind of fell in love with it from there. Then from there, I went to college for about almost 6 years. Did end up graduating actually, but didn't really use anything from college. Didn't really feel any sort of legitimate calling from college. I don't really feel like, anything that's, I just didn't feel fulfilled there. So I ended up leaving, and
I think that's most people, man.
Yeah, man. I mean, we're in America, so it's a little bit of a different thing. Just ended up leaving there and came down, started harassing a family friend who I met through, going down on the floors, going down during the summer to the floor. And he was now trading on the floor of New York Stock Exchange ARCA, an options exchange, as a market maker. And he kind of took me under his wing. Very, 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 very nice of him. I feel like I got so damn lucky with knowing this guy and getting into his life. And then, he kind of like let me go on my own. Then another guy who had actually been there for even longer, who had been trading for about 40 plus years, took me under his wing, and he became my main mentor. And then, spent a few years with him on the floor of New York Stock Exchange ARCA. Then actually ended up going on my own to above Chicago board of Options Exchange. And then after a few more years, started hearing more and more about Bitcoin. One of my friends hit me up from college saying, "Hey man, this Bitcoin thing's going crazy, and you got to get in right now." And then I just fell in love.
Yes, so exactly. Like the rest of us, man. Now you're in it. Now you can't get out of it. Once you get sucked into the world of crypto, man, that's it.
You're too far. You don't veer too far after this.
So I wanted to talk about what's going on because we've been talking about it for a little bit, and there was this really just extreme exuberance over excitement. Everyone we're going to the moon, and then we had that 30% pullback, which is very normal in crypto. That's very common. We had several of them throughout 2017. But I want to talk about right now because it does appear like we're putting in some kind of, like you said, a symmetrical triangle. We were looking at that earlier, but I also know that I've heard on your channel you're not particularly a fan of trading patterns, so to speak, but you do like the triangle. triangles. So I was hoping maybe you could break that down for us today. And, because I see some people, they're calling for 6K, 5K, 4K. I mean, some crazy low numbers. So
now that's where the conversation gets kind of weird. So I can show all sorts of things where, even if I did turn a little bit bearish on this chart, I would not necessarily be looking towards anything really past 7 or 8,000 actually. But yeah, it's pretty cut and dry right here. Yes, this is a symmetrical triangle. Operates one, looks like one, would technically be on the little bit of a more bullish side. Symmetrical triangles are statistically, just as likely to break out to the upside as the downside. And if I put on my drawing tools right here, you can see quite easily the measure move on this baby would be pointing towards about 14,500. If we do break to the upside, that would likely occur with a closure on a daily above about 12,500. If we do break to the downside, also gonna be confluent with breaking that yellow 21 exponential moving average, which is incredibly important for identification of long-term trend. Then I'd be looking at a measure move back down to about 9,400, 9,500. But remember, we're looking at the culmination of the last 6 months of events. So Bitcoin's really going to, likely spend a little bit more time in this region. We do see an apex coming in relatively soon. It's going to be right here on the 22nd of July, so about a week away. And these things are typically very, 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 very likely to break after getting about 69 to 75% full, which we're kind of actually right around there. So I do expect this one to break probably in the next few days, most likely, and 2 to 3 days, I'd say. And we likely will see some fireworks. I do lean to the upside just because our former trend was the upside, and the trend is your friend until the trend, as a great saying goes. And this market's been very generous with longs recently. And for full disclosure, full transparency, I think it's always important to have that. I am actually long myself. I'm long perps. I'm long both my futures, and I'm happy with that. So overall, I think it's always important to if I'm going to talk my position, I should actually show this as well. But
Deribit fan, huh? You like Deribit, Krown? That's your go-to?
Yeah. Yeah, I love Deribit just because I need to be able to trade futures and options.
Gotcha. Yeah, you're big into options, I noticed.
Yeah, that's where I come from, is an options background. So I feel, options are great because you can, I feel like the best way to explain it is I can be completely wrong in direction and still make money with a little bit of clever planning and options. That's the beauty of them. That's the glory. Anyways, looking at this right here, I do lean to the upside. We do, just because of former trend is the upside, but we do have momentum oscillators also agreeing. We do see daily Stokes to the upside, which have been a damn good indication of where we kind of are. The last cross that we saw to the upside was actually 10th of June. So that was right on over here actually at around $8,000. So that actually caught about a $6,000 pump almost all the way to 14,000. The time before that where we actually saw a good cross was right here on the 30th of April, 1st of May. And that happened at around a price point of about 5,400 leading up to this $4,000 move to about 9,000. So again, it's been pretty damn good. And if we actually kind of put this and just add in one more degree of complexity with this, which it's not too crazy. And I'm not saying anything massive here, but looking at the RSI, another standard indicator. We do see that if we actually take out this exponential on the RSI, that's going to lead up to another kind of, another kind of cascade of events, as we've seen both the Stokes and this signature right here line up in the past. So those same areas that we just looked at on the Stokes, if we look at it on the RSI, when we actually take out the exponential in this area, that actually does align up a little bit more with the actual trending move. So you can see right now, we actually aren't even testing it right now. But if you do have this is a public indicator. So if you do see this, and if you do have it, and if you do see the RSI close above that exponential, then we probably do get the next trending move. As it's literally lining up with about the same area right here on 5,000, and then same area as you can see right here on about this one would be about 5,400, and this one was about 8,000 right here. So I do like that setup. That's kind of the next thing that I'd be looking for. But of course, if you want to be, if you want to be a little more of a conservative trader, waiting for this to resolve itself is equally as valid. Pretty easy way to trade these guys. But again, when we're in a range like this, I do think, it's really, you can just wait this one out. Looking at the lower time frames, it looks to me fine. Looks to me that we're just, being picked up off the same area that we spoke about in my live stream this morning. If I go over here to my BitMexico chart, we do see we're actually kind of breaking these moving averages right here. And I do think that we're actually setting up in the lower time frames for a move back up to about 12,000, 12,002, somewhere in this blue box territory right here looks about right to me. And this is very orderly. And this is actually, for all intents and purposes, I know it sounds crazy, but this is actually pretty orderly for the way that Bitcoin does things. We do see also an historical volatility percentile, which I'll bring up right here, which is this indicator down here, basically measures a mean reversion to price based off of past price action with regards to volatility. I'm doing a terrible job of explaining it. But
well, SFox actually just came out with a volatility report that said it's actually a lot lower than we think it is compared to what we've seen in the past. So I don't know what you're seeing right now on the charts. Are you seeing it higher right now, or?
No, it's quite low is what I'm saying. Actually, we see it actually. I said that this would suggest that we are consolidating. Yes, absolutely. It is on the low side at 100%. And that's what you expect during a major, massive consolidation. So my point is that when we're looking at this right here, all of these moves to the downside and to the upside look like, they're crazy. And when you get stuck on the lower time frames, and when I say lower time frames, I mean anything, below anything below a daily's low to me, man. You might get lost in the minutia of this, thinking that, over here we're pumping to goddamn heaven, and over here we're dumping to hell, and then same thing each and every day, and that can be very wearing on a lot of people. And believe me, I mean, these are pretty volatile. I mean, they are pretty massive moves. Don't get me wrong. But when you kind of scale it out and look at this as a whole, you can see very easily that this is, has a very obvious signature of consolidation, not just with our price action in the formation of a symmetrical triangle, and also a momentum oscillator is kind of cooling off as well, but also this guy right here, the historical volatility percentile, which all three of those things kind of matching up is a trifecta of what we're looking at. So again, all pretty standard stuff, but I do want to talk a little bit more about what you said earlier. I think that's actually a really interesting topic because there are some I don't know what we'll refer to them as. What's a good endearing term? It's escaping me right now, but you know what I mean.
I don't know.
The smart bears, the very smart bears. And believe me, I was a bear during 2018. I was even a bear during early 2019 before we actually switched around. But right now, I would say that's, if you are looking for price, if you have a price target like below, 6,000, 5,000, 4,000, 3,000, I would just like to suggest that there's a lot of things that really need to happen from a long-term perspective. And the first thing that I kind of point out towards is this guy right here. So I'm going to put it on over to a chart of Bitstamp. This is perhaps the longest running exchange on Bitcoin. And you'll notice all these trend lines here. And I'm going to focus on this one that is pointed towards by these two red arrows. Okay. And this is the, I'll call it like the I don't know, the long-term trend line. I don't have a good name for it, man.
You must be exhausted. But after did you already do 2 videos today or what? Is this
I just did one, man.
Oh, all right, man. You're like a beast with videos. You put a video out like 2 videos a day, live streams. You're crazy, man.
Yeah, I actually really enjoy it, man. That's the highlight of my day, really. So this trend line is very important to kind of judging our overall posturing in the long-term feel of Bitcoin. You can see that in 2011, 2012, when we were below it, it was a great place to be a seller, and we were kind of accumulating. And it was a great place along the trend line to be a seller, but overall, this was anything below this area was a great buy. So when we actually break out above it right here in 2013, boom, parabolic one, blow off your top, and then go parabolic once again and blow off your top right and over here. And then we come all the way back down to the same trend line. And we base off of it for literally about a year and a half from 2015 to the middle of 2015 to the end of 2016 right here. And then we go parabolic once again. In 2018, Bitcoin was in big trouble when it actually broke this trend line back to the downside. And because this was the first, time of it really happening, I was unsure what that would mean. In fact, I thought that was going to mean it was going to take on a completely different bearish meaning. In fact, what we saw and what I know now, or what I think I know now, is that we see the exact same signature over here as we saw right and over here. This was a great, phenomenal accumulation zone. And once we broke back above it right here, Bitcoin just went straight up parabolic once again. And you can see that, and this is a trend line that, again, if you've been tuning into my content for a while, and I believe I even spoke about this on your channel, maybe a couple months ago. So this trend, or perhaps you remember this trend line. This trend line, I haven't changed anything about it. And to see Bitcoin break back above it and then base on it once, twice, 3 times, 4 times, and then rally up, tells me that is, that it's not necessarily a death sentence to go below it. It's just an accumulation zone below it, actually. And so now, as long as we're above this region, historically speaking, we stay above this region for quite some time. Now, not only that, I'm going to bring up this guy as well. Now, I'm going to bring up the good old Super Guppy, which
I get yelled at for using that on my channel. They laugh. Everybody thinks it's like the stupidest name ever.
Yeah, it's silly. It's not my favorite indicator. We can go through some more technical ways of doing it, but it's good for just getting a brief bird's eye view of this. And on the 3-day chart right here, you can see that, when it turns a color, I mean, it's a very, very user-friendly indicator. When it turns green, good. When it turns red, bad, right. Basically. And you can see that when it turns a color over here, starting all the way back in 2011, it stays, green for well over a year. When it turns red, stays red for well over a year. And then green once again for another couple years. And then red on over here during 2014, 2015. And then more recently in 2016 to 2018, green once again. And then we turned red for most of 2018. And then more recently, relatively recently, I should say, on that same breakage of that same trend line, if I bring it back right here, this is the same trend line, that dotted trend line right there. We also see it turning green around the same time. So we have multiple things lining up with each other is what I'm trying to say. And for myself, that does set in the longer term trend. So I don't believe, if Bitcoin, first off, I'm not bearish here, but if Bitcoin were to take the southern road, if Bitcoin were to take a little bit of a dumpy dump, I do believe that price targets, down in the mid to low 9,000s and mid 8,000s are probably appropriate. But this guy right here, I don't think that we go below this area at the very most 7,000, 7,500. In fact,
I was actually looking on my chart at around 8,000 because we'd been following something really similar on both of our channels. I noticed it was the the 21 exponential on the weekly. That seems to actually be putting in some pretty damn good support. I don't know what your thoughts on that is, but it's surprising how every single time, it seems to just bounce off it, or then it'll maybe accumulate a little bit lower. Can you go into that a little bit? Because it's been happening over and over again.
Let's talk about that in just a second.
Sure.
But I want to follow up on this guy first, actually, here. So this dotted trend line that we spoke about just one chart ago, this trend line, remember, this is going to be like a base of operations, so to speak. So as long as we're above it, I'm generally bullish. And that means that this can kind of, find and govern our lows going forwards here. So we can actually come up with potential price targets or potential low targets going forward. So even if we were to dump from this region right here, this trend line would still be coming in right around about 8,000 actually. Yes. In rising over time, of course. So you do see that if we just even go to the end of this year, it rises up rather rapidly. It would be actually all the way at about almost 13,000, I believe. Yeah. Beginning of 2020, it'd be right around about 12,500. It looks like if we even just extend that another year out, if I can do this, oh no, I actually can't do that. Can I?
That's pretty crazy to think even on the low end, worst case scenario, you could have a nice accumulation around the 13,000.
Right. And that's literally higher than where we are right now. But remember, Bitcoin's volatile. We can have all sorts of crazy price action between now and the end of the year is literally eternity in cryptocurrency land. Going out a little bit further, we do see, maybe end of 2021 beginning of 2022, perhaps better said. We'd have maybe potential low of like 65,000 is what this would show. So again, I am bullish on Bitcoin. This is kind of what I've been waiting for since our first chat, actually, because the first chat we were still kind of in the bear market. Now it's still leaning to the downside. Now it's kind of glory times once again, but there will be trials and tribulations. Anyways, as you said, the 21 on the weekly. Let me bring this up now. So let's actually just do the 21. Let me just get rid of everything here. Boom, 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 boom. And there we go. Yeah. So this guy right here, has been pretty damn good. We do see in basically in the turnaround of 2015, it, just follows it up the whole way through. And again, the 21 exponential moving average, just kind of give you a brief overview and kind of why I use it and why I put so much weight on it. That's a great insight in what the Boston algos are doing for the long-term trend with respect to that time frame. So on a weekly, we're uptrending, obviously, comes tested right here, comes tested right here. Actually, not even, but you do see in the past pretty damn good. Gets the highs of 2018 relatively well as well. And same thing in 2014. So we have a damn good insight on what the Boston algos are doing in this market, the ones who actually move the market, which is probably the most, important one to keep tabs on. And where would that be coming in? At current trajectory, that would be actually at around that 8,000 level as well. So I would agree, man. So we have multiple things lining up with that. If Bitcoin were to dump, really hard back down, I would look at that as a base of support. But remember, it doesn't imply that Bitcoin can't go lower than there. It would imply that if we do break it, we're in a new world. We're in a little bit of a different phase of the market, and we'd have some significant downside, and the whole trend would be completely different. But I just want to show right now that that's very well and far away from happening. Now, what's staring us in the face right now is a pretty nasty weekly. It's a really nasty weekly, to be fair. We have a damn long wick to the upside right here. While I am kind of bullish on the lower time frame, saying that it does travel up here, the problem is that the weekly does close at Sunday at 8 p.m. Eastern time. And what I really want to see for the weekly, if we are going to get the next breakout to the upside, it's likely going to be concurrent with also closing above the top of these Bollinger Bands right here. I like to call them the Bollinger Bands because, well, they're kind of I used to really hate them in traditional markets, but they actually get cryptos okay. And we do see that it does have good, good looks in the past with these strong trends to the upside. When you're closing outside the top band or below the bottom band, that's indicative of a very strong trend. So, in early 2019, we were pushing to the upside. In late 2017, we were pushing to the upside. In late 2018, right here, we're pushing to the downside. These were all indicative of strong trends. And you do see that we are messing around with this area right now. 12,400 is the area to beat. But I would say your next big signal, so to speak, and of course, it's not financial advisor, not financial advisor, just kind of sharing my thoughts and experience on this market. But if we do close this next weekly above 12.4, then I would say that's going to likely come into confluence with breakage of that, that symmetrical triangle to the upside. We have a target of somewhere in the mid 14,000s. And realistically speaking, I don't think it'd stop there. I do think that we'd travel up much higher because what I'm looking at right here is the volume profile. And if we can, let me first explain this. The volume profile basically shows
we use this on our channel. Yeah.
Oh, okay, great.
Yeah,
okay,
it's like it's basically where like a lot of the price action during that particular price, there was a lot that went on during it. So we were looking at the one actually that had a lot to also do with my $8,000 level as well, because you could see there was like a ton of it around 7.9. So
you see some activity here. Yes, absolutely. My point is that if we do close above this area, really even a weekly close above about 12,000, you can see that there's very low market acceptance up here. So Bitcoin can really rip. I mean, it's been ripping for the last few months, but let's put it in perspective. Down around here at 3,000, and again at 6,000 during 2018, price action was slow as molasses. Right, it was a pain to watch each and every day. But now, once we've kind of gotten above these humps, it's getting less and less and less, and you can expect that this, these very massive swings in price action are going to just increase. I mean, one, because we're dealing with bigger numbers, so naturally, it's an issue with that. But then also, there's just really not too much to be going off of from before. So people are going to, it's kind of like no man's land essentially. So you'll probably see like these crazy ranges that grow even more and more as Bitcoin gets more and more bullish, which again, I'm only saying this if we initiate that next major move to the upside. For right now, still kind of in a decision phase, technically can break out just as easily to the downside. What I do think is a little bit more becoming a Bitcoin, or a little bit more, confidence inducing on Bitcoin, is this right here. We do see the monthly looking pretty damn good. The monthly had a pretty good close, a little bit of profit taking right here at the top side of the Bollinger Bands. We do see momentum oscillators pointed back up, and usually when I got a close like this with Stokes pointed back up and actually getting out of the bearish control zone as well concurrently, we probably, it's very, very likely that we actually do, test it again and probably try to push it. Not only that, but my own personal indicator, the Jewel, also firing off a not a super strong buy signal, but a decently strong buy signal. It's certainly nothing that I wouldn't ignore it. And we do see monthly RSI regaining this exponential right here and actually working its way into the bullish control zone for the first time in well over a year. You will notice, however, though, that the last time that we had a similar signature like this was back over here in 2016, and we actually got immediately rejected from the bullish control zone after being away from it, for quite some time, and resulted in about, if we go back on over here, this was which area was this? Yeah, it was this area right here, resulting in about a 35% drawdown right there. So I would be a little bit, cognizant of that. There are a few bearish things on the board. Don't get me wrong. The picture is not all 100% bullish. If I go over here to my 3-day and bring up my indicator once again, the Jewel, this thing has been damn good at calling major, massive drops on Bitcoin on the 3-day, like these big pullbacks. And the signature that I'm looking for is what we see right on over here. We see this light blue oscillator get into this critical zone outlined by the red dotted trend lines. And once that happens and we get red flash in the background right here, and then get a negative slope on that light blue oscillator, that's when, historically speaking, we played out at the very least 30% drop downs with, in some cases, all the way up to 60%. Now, I don't think that we're going to have a 60% drop down, but just kind of show, a few examples here. It basically got all of the major downs during the run during 2017. So my point is that right now, that sorry, if you're watching, that's 30%, that was 35%, and this one's almost 37%. And then another one right here, which was obviously a lot more. But my point is that I'm really not looking for a major top being put on Bitcoin until we actually get that same signature. And if you look at right over here, that light blue oscillator is nowhere near this zone. So any sort of a downside move that we did have, which can still happen, don't get me wrong, I wouldn't be looking for anything more than like a 30 to 35% move to the downside. Then again, that's also a 30 to 35% move to the downside, right? It's not, it's nothing to kind of smirk at, right? It's pretty, it's still pretty massive.
Well, also the one that we recently had when we hit almost 14 and came down, it happened so fast that some people felt that just wasn't sufficient enough because it was just too quick. It didn't have, it should extend over a little bit of a longer period of time.
Yeah, I understand what people are saying by that, but the timing of these things, I do think is less important than the actual reality of what happened on price action, right? Mm-hmm. So we still had a pretty massive drop down here, right? This was about 29%, so just a hair under 30%, and happened over the course of what, about a week. So yes, it was certainly on the shorter side. But if we go back on over here to the first turnaround during 15, right? Let me just get rid of this. We do see kind of like the same signature where these pullbacks happened a lot quicker, and it wasn't until we got more mature in the market, throughout 2017, late 2017, where those pullbacks occurred over a more longitudinal period of time. So this one right here happened over the course of, really just about the same time, right? Spent a lot of time kind of consolidating within this region, and then boom, up once again. Then we get our next one right over here. This one took a while. This one right over here, not so long as well. This one over here took a while. This one took a while as well. So I wouldn't necessarily agree with that statement. I'd kind of push back on it because that's not fully, not as important again as actual price action itself. So
I mean, essentially, if you're saying bots, I mean, the bots got what they were looking for. They put in their numbers. The cells got put in. So why does it have to be longer? I guess.
Yeah, exactly. And, looking at our fibs too, I do like to actually look at fibs every once in a while. Usually my moving averages should cover them up, but let's just see if anything lines up here. And realistically, what we're looking at from a top to bottom, if we bring this over, we basically topped at the 618 Fibonacci retracement. That's an algo target right there. Almost always they're going to be selling that area. It's just the nature of their programming, right? And where do we come down to? We come down to the 0.5 right here, and they pick it back on up, and now we're just consolidating between this area. So I would say, did we come all the way down to? We almost got down to the 382. So if you're going to be selling the 618, yes, typically your target is going to be the 382. So this is a little bit more normal from what I'm used to. And now we're kind of consolidating between the 0.5 and the 618, which actually would imply more bullish nature as well. When you hang it up higher like that, the bots and algos are still on the buy side, more than likely. So again, I would say that's the next target from this sort of, and this is a much more long-term look at Bitcoin, of course, right? This is not happening today or tomorrow. I don't want to make it sound like this is the time to FOMO. These things happen over time. But we do see the 786 coming in right around basically that bull trap that we saw in 2018. This is actually where I took out most of my money out of this market, back over here once we got the second lower high. And again, my sort of trading style, I'm never going to catch the ultimate high or the ultimate low. I'll catch this guy right here. I'll catch this guy right here. But this guy right here and this guy right here, no, I never catch that. So as a trader, I just want to say, hey, don't be too hard on yourselves trying to catch every last little bit of a move. You don't need to do that to make money. I mean, damn, man, I've actually been holding basically a position from 39.30, albeit I did mess up on my I did mess up on my derivative account here. It was supposed to be on these perps, but I ended up adding it. I intended to add on these December futures, and then I was rushing through. I made a mistake, just dumb stuff, and of course I make mistakes all the damn time. And this one, just me being silly, ended up putting this position on perps instead of futures and destroyed that beautiful entry. But of course, what are you gonna do, man?
We all have our little hiccups, you know what I mean? But Krown, really quick though, I know we're like really getting into this, and this is what you do, you get into charts. But while I got you on the channel, because it's not very often, I wanted to ask you a few, I guess it's almost like fundamental things, because you've been in this for a while, and I know these are questions that people would want me to ask you. Now, you said that in your opinion the market's been maturing, and I do agree with you. I've noticed a lot, even in just the logic of traders has changed. Even just in my Telegram chat, just I can tell that the people in the space have evolved, right? But outside of that, you know, you're also looking at weekends, right? And weekends are typically not very good times for trading because a lot of traditional traders sort of take that idea with them and bring it to the crypto space. But if you actually looked lately, we've had massive movements on the weekend, and the volume is way higher than it's been before. So what is your thoughts on that? Is that the market maturing as well, or? I mean,
I have no idea. I can't give you any. I don't have any reason for it. I don't even think it matters if I did have a reason for it, man. These moves on the weekends have been so brutal. I can't imagine traders on CMEs sleeping at night during any sort of weekend.
It's almost like most of the action is happening on the weekends. Almost, it seems like lately, which is interesting because today's Friday and we're starting to pump right now as we speak. So it's
and that's a good point. I mean, you know, I think it still does follow. We still do see naturally lower volume on the weekends, and that would suggest that perhaps the people who are moving this market are choosing to do it on the weekends because it probably takes them less money to do so. So, you know, during the weekday, you probably have to chew through all of the order books, and you have to get through all the bids and asks, and you know, do it that way. On the weekend, most people do take it off. Most people probably have like a normal life, unlike me. but
actually, you and me both, man. I assume yours is. I assume you're attached a little bit more to a computer than I am. But so here's a funny thing to bring up. So we're talking about the CME. We're talking about not being able to sleep because these gaps, right, are getting formed. Those are your favorite topic, I'm sure. Now we have closed some of them, right? And some people, you know, have this idea that we need to close the gap. Now, this was a relatively new concept for me this year. I didn't even know that was a thing, closing gaps. I didn't even know that we had to do that. But we were previously closing all of them, right? We had closed the top ones and then the most previous one, but we still do have the two from way long ago. One with a low of 8,500 and another one with a low of, I think, 7,200. So, I mean, are these
I would actually push back on the 7,200 one. I do see the 8,500 right here. 7,200, I do not identify as a gap. I think that
I think you have to go to a little bit of lower time frame.
Yeah, and that's the problem. You have to go to a lower time frame. So if I go to a daily right here, you can see that actually we did come back and kind of fill it. In the daily is really how I judge these things. So if you want a rule of thumb, and this is really where I come from. So I come from trading traditional markets, and you know, gaps happen basically every day. And realistically, you want to see these on no less than a daily if they're going to like actually get some play. So if you have to go down to like perhaps like a 4 hour, which it would look like the gap is unfilled right here on the 4 hour, right? But if you go to the daily really quick, you can see pretty damn easily that this price action pretty much flows. It's smooth. It's okay. The market knows what it needs to know.
So that's good to know then. So then basically don't even bother on the low time frames with those. That's because I mean, you know, the lower you go, you start seeing some crazy things happening. It's like you know what I mean?
Get lost in them, man. That's the problem.
It's like the Matrix, man. It just candles are jumping, not even touching each other. They're all over the place. So
many good men have been lost in lower time frames, my friends. Yeah, man. So I do want to go back up here just for a second and show something else that perhaps doesn't get talked about as much. But this is a quarterly chart. So this is a 3-month chart right here. And this is why I still would remain pretty bullish for a long term. If you're looking for price action to come back down to the prior lows or even 5,000 or even below 6,000, I'd say that's pretty. I mean, it can happen. Anything can happen, right? But as far as probabilities goes, which we'll actually look at a chart of probabilities in a second, unlikely. So with regards to this chart, I think here says it all for me. We have been riding the 21 exponential moving average on the quarterly, basically ever since we formed it right over here. To be fair, Bitcoin is a little bit of a newer asset, so it doesn't have all that much space to go off of, but we have enough. And more importantly, you do see from this perspective, based off the quarterly, all of 2018 was, as far as the long term is kind of concerned, was just basically kind of a distraction. Yes, we did go down from 20,000 to 30,000. That's a crazy, amazing drop. Don't get me wrong. But when we look at it from this perspective, you do realize the more long-term trajectory of this asset. And more importantly, when we bring up, again, our momentum offsetters, we do see quarterly Stokes literally just freshly crossing on this next one. Now, to be fair, this doesn't get confirmed for another 3 months, but we just set this one in stone.
But it's curving though, so we could be hopeful.
Yeah. Right, and we see the RSI taking out the exponential as well, so I like that. And then also of importance, and what I kind of like right here is these trolley bands. Actually, we close that last quarterly right at the top of them, and that is usually a really good sign. Usually, you get a signature like that as you begin to push these. And so, what I would say here at the behest of sounding like a complete bull-tard moron, which I'll go out. I did that based off this. By end of year, 20,000 is certainly in the cards. I'll put it that way. It's very much in the cards. any sort of I mean, if we get this next move and take out the high of that last quarterly at 13.8, I think that's extremely likely before end of year if we do see that. So again, a few things need to happen, but this would say that the probabilities do rely on that. So let's actually go over to a chart of probabilities. Now, this is an expected moves charts based off of historical volatility, which again, volatility you already know, mean reverting oscillator, which essentially gives you the returns to past prior action based off of that. And we do see this marked off of in 3 different rings. The first ring is the first standard deviation. So if you're familiar with statistics, kind of like the bell curve applies. The first standard deviation is the 68%, most likely. Second standard deviation is this yellow guy right here. That's 95%. And third standard deviation would be like 99%. And some odd decimal. Anyways, my point is that if we look at this on a daily, we can see that we're very obviously consolidating, and in any sort of a move basically above about 12,500, I'm looking for a move to the upside. Any sort of a move to the downside below about 10.5, 10.6, and I'd be looking for some significant moves to the downside after that. But we can actually extend this. We can actually extend this to the end of the year, which if we put on days to expiration, let's see how many days. It's about 6 months, right? So that's about 150, a little bit maybe 169 days. We'll say.
Krown, is this a publicly available thing, or did you?
No, it's still under construction, but. This would give us the potential ranges for end of year and their likelihood. So the first standard deviation will show a range between, and this is not too helpful to be fair, but show a range between about 5,200 to 27,500 essentially. That's 68%, extremely likely to be within this region. I'd probably agree with that. And based off of our other indicators that we saw earlier in the show, I would say that we'd probably be somewhere between 13,000 and 27,000. So if you want to just kind of mark to the middle there, do the mental math. I don't want to even say the numbers at just in case I sound completely moronic, but do see that.
I mean, dude, I don't know if you saw the video. There's this guy, Crypto Savvy, and he's been. I don't know if you've seen him. He's been charting this chart and comparing it to gold. And it's unbelievably crazy, the fractal similarities between what is happening right now and what we previously saw when gold spiked to the high before it started retracing back to the 1300s again, even though we're up now.
Yeah. I have a big bone to pick with fractals and stuff like that.
I mean, it's really crazy though. It's uncanny.
I hear you, man. But that's the thing, is they always look uncanny. The problem with fractals is they always look perfect until they don't. Right. Yeah. And then because you probably and everyone here probably knows, if you've been in this market for the past year and a half, you already know this. And let me just kind of maybe bring up a painful reminder of 2018, right? Yeah. Remember during 2018, everyone and their mother was trying to make a fractal out of this, telling you 6,000 is definitely going to be the low, 100%. No. and everyone was trying to make this relate to this guy right on over here. And it's just each and every day you'd have to adjust it a little bit more until it's okay, well, how do you take a trade off this? How you're going to lose all your money before you figure out which one actually works. And that's the problem with fractals. It looks great until it doesn't. And then when you go back to it in the future, you're like, oh, it's perfect actually, because you can just kind of match it up. So that's a problem with it. And the thing is also during 2017, everyone was looking at fractals of the Wall Street cheat sheet, right? And they're saying, this is the top right here because I saw the cheat sheet. And then they're like, no, this one's the top. No, this one's the top. No, this one's the top. And they all look the same. Exactly. Because typically that's how assets put in tops. And this one looks, pretty much the same as what we saw right on over here. Just the only difference is we put in a lower high.
I mean, dude, you could look at what we just did right now and say that we're mimicking the 2017 peak.
100%.
And we're just doing the same thing. Now we're just going to go down. And this is the lower high. That this I mean... There's so many.
That's my issue with fractals, and kind of why I'd rather back off from that from that talk. As it looks good, it's sexy for YouTube because people it looks right, it looks right. But at the end of the day, as a trader, I don't know anyone who trades fractals or anything like that. But
it's fun, man. It's fun. I mean, just to entertain the idea of having a $46,000 Bitcoin, it's just fun. You know what I mean? Because like you said, what are you going to talk about every day when you're just looking at something going up and down, up and down, up and down?
Yeah. the good old pixels on the screen. But yeah, man, rounding it back to the lower time frames, as perhaps there's some people interested in this. I do think I do think that we have a little bit of upside here, probably back up to 12,000 area right here, and then probably testing this blue box territory in like the more interim times, over the next few days, which would put us around like 12.3, 12.5. And remember that's where things actually do start to take on a different meaning, as we'll start to actually, if we do get above about 12.5, 12.6, we'll start to break this formation to the upside. So just understand how all those lower time frames kind of interrelate with the higher time frames. Of course, just as easily, what if we take the southern route? What would that kind of look like? Well, if that were to happen, we'd probably start to come back down and violate this 11,150-ish region. But again, that's pretty much getting that at the same time as the daily, cracking through that 21. So, both ways are pretty well defined. I think everyone's in this market is kind of looking at the same thing. So of course, it always goes up without saying, when everyone's looking at the same thing, usually some good old games get played. But with regards to that, people always ask me that, how do you kind of resolve that? I still play my edge when that happens, man. I still play my edge because that's what technical analysis is for, and let the chips fall where they may.
So let's have some fun. What do you think, man, for the end of the year? What's your not professional opinion prediction? Totally not professional, not financial advice. I won't hold it to you.
If I had to say a range, I'd say between 13 and 22, maybe.
That's conservative, man, compared to some.
I mean, that's what concerns me, though, is that people are getting like really exuberant right now, which I am bullish on Bitcoin, but I do have a problem with getting like super bullish. I do think that 20,000 plus is possible. Is it probable? Actually, technically, a little bit more on the probable side, I suppose. But I guess I'll kind of take the easy out and say 22,669, because I like that number.
Long story short, higher. So we'll take that as a very positive thing. So also, Krown, I wanted to say thank you very much, man, because I actually had an opportunity to use your obviously it's like a lot of videos, but your instructional videos that you have, man. And I got to tell you, for anybody out there who's like looking to, and I'm not trying to like, I guess I am kind of shilling your product for you in a weird way, but I do want to say from what I've actually had an opportunity to look at so far, it's been pretty good. And yeah, I mean, if there's anybody out there that's interested in learning, obviously not, if you're really serious about it, because Krown is clearly serious about it. I joke on my channel, I have fun, but when it comes down to it, at the end of the day, it's money, it's your money, and it's not funny when you don't have that money anymore, right? So I just wanted to give you a shout out, man, and say, thanks for doing that for the community, man. Really great. And it's been pretty helpful for me. Like, I mean, seriously, dude, you've been an inspiration to me. I mean, if you look at, when I first started doing TA, I mean, I'm nowhere near your level, but honestly, man, just the few things that you've taught me have really helped me to better sort of understand maybe where I should allocate my funds or what I should be doing.
And it shows. I mean, it really shows, man. I've seen your stuff, and it's coming together, and that's awesome, man. And that's it's always a journey, man. It's just like anything. You put in the time, and over time you'll get the results. But I'm very happy to hear that, man. Really happy to hear that. And yeah, if you're interested in that, definitely check out my YouTube channel. I have a free playlist on there titled Technical Analysis 101, and that's
one of the most comprehensive free playlists, I gotta admit, too, because most of these guys, I mean, you do have a paid course, but most of these guys, they're just like, all right, download this, it's $1,000, that's it. But you actually have a free thing. You're like, hey, man, no, before you drop that money, watch these. If this is too much for you, then maybe you should.
Oh yeah, absolutely, man.
And I respect that, man. That's so cool about you.
Oh, 100%, man. I make my money from trading, so I'm not interested in selling people things that they don't. That's my big thing with that. In fact, I tell people, hey, most people, you don't need my program. It's going to be complete overkill. You don't need it. Start with the free stuff, and that's probably going to get you where you want to be.
Absolutely. So, Krown, I don't even know how long we've been going. I lost track of time. What time is it? 45 minutes or something like that? Pleasure. We can't make a short video, so thank you so much. I do appreciate it. I mean, honestly, it was just good to get you back on the channel. Usually I like to call you up during those really crazy times, but unfortunately, when we had that madness happening, you were in the middle of moving, and we couldn't get a time set up, but it was really nice to have you hop back on the channel. So, guys, anyone out there, if you don't know who Krown is by now, check him out, get subscribed. The dude is blowing up right now, legit. full time. This guy, we have fun with the charts over here, but this is this guy's life. So definitely check out Krown. And once again, buddy, you're always welcome on the channel. Thank you so much. And
absolutely. And thank you so much for having me, K-Dub, and great to be here as well with the community. And thanks again.
And you finally switched to bullish, kind of bullish, because I remember in the beginning, it was funny because everybody was coming to my channel and they were like, K-Dub, you need to calm down. They're like, you're way too bullish. You need to go watch Krown. And I remember actually before we go, our first video we ever did was actually looking at the super lows, being we're going to go down to 1,800. So it's amazing how in just a few months, not only the sentiment, the price, the just everything. It's like a totally different world, man. Yep. And I really feel bad for people that just sleep, on the sidelines, and they just keep watching and watching. They're like, I'm gonna wait for the pullback. I'm gonna wait for the pullback. It's like, dude, even if you get your 40%, 50% pullback now, what you're still higher than when we were talking about it in 3, 4, 5. So I know you do trading every day, but one of the things I say on my channel for the average everyday person is just dollar cost average. I mean, if you look at it over the course of Bitcoin's history, I forget who it was. Data Light. They were saying it's only been 60 days out of the last 10 years that if you bought Bitcoin, you'd actually be at a loss. So, I mean, dude. It's the most best performing asset I've ever, in the world, really.
It really is, man. It really is. I've never seen anything like it. Never seen anything like it.